Please welcome the panel on Finance's New Frontier, moderated by founder and CEO of CAIS, Matt Brown.
I like that music.
What?
That's a good music.
What a soundtrack.
Yeah.
Was that selected by you, Rob?
Yeah, of course.
Great. Well, welcome everybody. It's great to be here at Milk, and the energy is pretty astounding. I'm glad this is the celebrating the power of connection. We can definitely tell that we're all in need of getting back together again. So my name is Matt Brown. I'm the CEO and founder of CAIS. For those of you who don't know, CAIS is a technology platform that connects alternative asset managers to the very large and fragmented universe of US wealth management. I'm thrilled to be moderating this panel, Finance's New Frontiers, and I look forward to a very dynamic discussion with our panelists. It's clear to everyone that the industry has been redefined by data-driven insights, artificial intelligence, cloud computing, and it doesn't seem that there's any corner of finance anymore that is not necessarily being transformed, including two of the most oldest, which is of course real estate and commodities. So what I'd like to do is first join me in welcoming our panelists, our esteemed panelists, and I'd like to ask each of the panelists to please introduce themselves, and if possible, just tell us a bit about your current role and when did technology really hit you that it was just transforming your world? And Rob, in no particular order, why don't I kick off with you?
Glad to be here. My name is Rob Havard. I'm the founder of an investment platform called Motive Partners, and I've lately converted to private equity. I spent my whole life building companies. Extremely passionate about what technology will do to financial services. And less so from an infrastructure and what AI and all those kind of things are going to do to you, but the choice of the individual, the person that has long been sort of at the end of the chain of a financial services situation. I want a mortgage, I want this, I want that. We'll give you what we have and we'll score you how we think we should score you. This whole evolution of the ability of individuals and corporations to have choice and to embrace an infrastructure which basically allows frictionless execution of a financial services transaction, where finance is everywhere. We're passionate. We have a couple of $1 billion invested in that space already, and it's a very exciting time, and we'll talk about it. I'm very sensitive to valuation, but less to what the market does today or tomorrow. One thing I know for sure, and I don't know a lot of things for sure, but is that we're at the beginning of this journey, and all the things you just talked about are just tools to get to a world where there is more transparency and there's more choice, and the individual controls his or her data and allows a circle of trust to come in, and with that circle of trust has financial products at its disposal. That's what we believe in.
Rob, take us back though. When did you first kind of have the moment where you just saw it was so clearly that technology was stepping in such a transformational way?
I mean, it's fascinating. I was a young kid, and in my early 20s when I had the privilege of architecting the fixed income, the transformation of the euro. And I realized what kind of power that existed in technology to basically get stuff done. So I've been passionate ever since. But the real click has come with some of the stuff that happens in technology breakthrough. And I think we'll talk about it. The cloud, AI, they're all tools, but they are all about democratization. And we'll talk about it. Democratization in general is a fascinating term, not just from a technology perspective, because the ability for the individual, yet again, to have the ability to have choice and to have access to that special product is very powerful. It's like the Netflix experience. I mean, they know so much about you and you feel comfortable that they give you recommendations. Yeah. That's not yet in financial services. A product is a product, and so there's a lot to do about it. We're super passionate about it. Yeah. I'm sure we'll talk about it. I have to disigree with somebody on the panel.
We're going to get right there.
I disagree with you, Matt.
Yeah, I disagree with you. Claude, you're joining us from a kind of a different perspective. Rob, obviously being an investor. Actually, we have a lot of diversity on this platform in terms of, or this panel in terms of roles that we all have. But please introduce yourself and tell us a little bit about your technology journey and how you found yourself here.
Hi, I'm Claude Lopez. I'm head of the research department here at the Milken Institute. We work on international finance, which is something that is relevant for this panel, but also in health economics and regional economics. So my angle is a little bit different because what we're interested in is looking at the entire financial market, so the stability, financial stability, systemic risk angle. And so it's not that whenever I realized that tech was becoming a significant change, but it's more whenever regulators actually acknowledge that. And surprisingly, compared to the stories that you just described, it was quite late. The BIS came up with 2 papers talking about tech, one regarding big tech challenges and risk and challenges, and another one regarding digital central bank digital currency only in 2019. Okay, so I think that it's a good angle to see that even though there were a lot of changes, whether it was fintech or tech-fin, that's really tech creating a change, awareness from the major regulators of the financial system was a little bit on the later hand. So I would take that as my date.
Perfect. Joanne, welcome.
Hello.
So tell us a little about yourself and your journey with technology. I think you have a very interesting and unique background.
I do. I'm often portrayed in the newspapers as the oldest computer programmer in the world. And I started programming when I was at high school. And I was describing to you, wasn't I, that no one thought that was unusual. I went to an all-girls school in London. And I've really been programming ever since. And so I have an interesting perspective about transformation, kind of from all of those years of experience. I most recently quit my job as a partner at Goldman Sachs in engineering, moved to Zurich to become the CTOO at Credit Suisse, the first CTO that sat on the executive board in Zurich. And so that has an amazing platform to create transformation. And I'm going to talk a bit about today about some of those ideas around how, what a great platform it is. I mean, transformation-wise, I think I am completely used to having a career which is about skills acquisition. If you ever come to my house and into my kitchen, there's a huge memory board on my kitchen wall. It was the first memory board I installed onto my Stratus mini computer when I was a sysadmin. It cost £1.5 million. It has 10 megabytes of memory. And it's worth nothing now. But it's on my kitchen. When I look at that sometimes and I think, you've really got to think about, I mean, it's an investment question, isn't it, for sure? But to me, that's a point in time and I remember acquiring that memory card, and I remember having to go to the board of the company I worked for at the time, and it was such a big deal to spend that much money on that piece of hardware. And it's just a very clear explanation of some of the potential and the constant change you have in technology.
You said you were the first Chief Technology and Operations Officer on the executive leadership team at Credit Suisse. That really shows you where technology kind of ranked historically from a visionary standpoint, a leadership standpoint. I think we should click on that in a minute or two. So Paul, welcome. Good to see you again. Our second panel together.
Yep.
Yeah, you did great the first time, by the way. That's why they put us together again.
So did you.
Yeah, thank you. Give us the update. Tell everyone where you're currently at Citadel, what you're focusing on, and kind of a bit about your journey with technology and transformation.
Sure. So I work at Citadel Securities, which is one of the largest technology-driven market-making firms in the world. But perhaps by background to my role and how I got there, coming out of the financial crisis, regulators were very, very focused on making certain aspects of the market more resilient through creating competition and fairness and transparency. I was working at UBS at the time and saw this rather unique, almost once in a lifetime opportunity where fixed income markets, which rarely change and rarely had changed in many, many decades, were about to change quite fundamentally, or put differently, the framework had been created for them to change quite fundamentally. It seemed very unlikely the existing players were going to capitalize on that new framework. And it seemed to me and to our brilliant CEO, Hong Zhao, that there might be something we could do with the core DNA of Citadel's technology, quantitative research-driven platform, which made us so great in equities and options markets. Could we take that and apply it to something quite different, like the fixed income markets? I think we knew we would succeed, we just didn't know how. But to end on a summary of what I sort of knew the impact we were going to have and could have, we launched with just 5 interest rate swaps that we offered liquidity to our institutional customers to trade. By the end of just 1 year, then this is a market dominated by large investment banks for decades. By the end of the first year, we had 20% market share. Wow. We were the #1 player in US dollar interest rate swaps. And what got me most excited was when I realized clients were coming to us and saying, how could you do more of this? How could this have been so bad before? We can't remember how bad it was, but now we can see how great it could be with the simple application of the core DNA that we're great at, solving problems, driving efficiencies, leveraging our technology and thinking differently about how we can make an impact to our clients and markets.
Oh, we're going to dig right into that in a minute. That's really impressive. Rich, welcome.
Thanks for having me.
Yeah, tell us a bit about where you are in the world right now inside of Two Sigma, starting a great new business for them, it looks like.
Yeah, so I've been at Two Sigma now for a year. And Two Sigma is a large financial services company that really embeds technology, data science, in the core of everything it does. And I come from a real estate background, and the firm about 3 years ago decided to start really investing in how can we use and leverage our resources and the platform of data science and all the data sets and the great infrastructure of the company and apply it across private markets. The firm's already has already businesses in private equity, venture capital, and impact, and real estate being the largest asset class in the world, $300 trillion asset class, is one that, ironically, throughout my career, I've always seen this, is one that has been a laggard on technology. It's been slow to adapt to new innovations and slow to embrace technological changes, and there's a lot of structural reasons for that. It's highly fragmented, a lot of different ownership structures. So it's one that over the course of the last probably 20 years, you've seen an explosion of data being produced, both structured and unstructured, and there's an incredible opportunity to take that and really apply that to investing. So it's been exciting for me to be a part of really a data science-driven company and bring a private markets, real estate approach to it, so that's what I've been up to.
Great. Thanks for that. Well, we have definitely a lot of different experiences on this panel. Joanne, I'd like to start with you, if that's okay. So Credit Suisse is now spending approximately $4 billion a year on IT.
Yeah.
And you're operating under a philosophy of run the bank and change the bank.
Yeah.
And you're splitting that. How do you transform a large organization like Credit Suisse that up until just recently didn't even have their chief technology officer on their leadership team board? Walk us through that. Give us the detail around that.
Thomas Gottstein's the CEO. He called me before our CAIS, and he said to me, I really see that technology it's transformative for wealth management business. And I thought, wow, for a CEO to kind of realize that is really impressive. And then our CAIS happened, and he called me, and it made me want to join even more, because those moments are often catalysts for change. And one of the things that I've realized, being at Credit Suisse in Zurich, is that it's just this most amazing ecosystem. I'm really a big believer in ecosystems. I'm a really big believer, certainly in technology, about how you take 2 or 3 pieces of information and they create a whole different meaning in their own right. And I've seen that time and time again. And the history of Credit Suisse is that 170 years ago, it was created to finance the creation of the Gotthard Tunnel. And if you live in Europe and you want to get from Northern Europe to Southern Europe, you go through 2 tunnels. And so the creation of the Gotthard Tunnel, 16 kilometers, through the Swiss Alps, was a huge engineering infrastructure project. And our founder also at the same time founded ETH. ETH is one of the best engineering schools in the world. And in this relatively small city, you have this long history of financing engineering. So I felt the engineering mindset was there, the significance of engineering was there. And I kind of think that the cultural values are sustained over a long period of time. I spent my career at Goldman Sachs, that has a long history. I could see that. And so as soon as I arrived, the whole management team, the board and the executive committee, it was like they were waiting for me to come along and not just embrace good technology. I mean, often the technologies are side products. I mean, the way you transform is that you have the right skill sets, you respect every voice in an organization is worth listening to, you create a common set of values which reinforces your culture, you associate your actions with them. So for me, one of the kind of key aspects of culture that I really value is this idea that you can create communities, that you really think about the outcomes you want. I mean, if we were here, if this was a financial services conference, we would be talking about the problem of legacy computing and how it feels often like a great big boulder around transformation. But I don't really see it that way. I actually see the kind of way that people work and the creation of a very agile, and agile's not rapid, agile's flexible, lean, and highly accountable organization as being the kind of key ingredients for transformation. And the hardest part, I think, is to inspire an organization which is very talented to go in a single direction and kind of believe that message. And so I spend a lot of time with the teams. I ask them what they think. I actually largely agree with them. And it quite quickly becomes a story about how we execute. I mean, we were talking, weren't we?
Right.
And we were talking about this idea of, I mean, there's some interesting opportunities that probably didn't exist before. I mean, I think this idea of a cloud, I mean, often people think about a cloud as being, you take your existing footprint and you put it in the cloud. And I think that, you know, the first movers that did that probably regret that. But I think cloud creates ecosystems that don't exist today. And I think that, you know, we were just discussing the ecosystems around maybe financial firms that didn't exist before, that weren't possible before to share data. Right. And I think if you can actually use low-code solutions to upskill your workforce, which maybe are doing manual processes, that's a reskilling opportunity that doesn't exist before. That whole kind of premise around valuing your staff in a transformation, your existing staff, I think that's critical to transformation.
Right, so it really starts at the top. You had the buy-in on day one. They were embracing change. But what was the hurdles that you face, and what is the outcome now that you've been in this seat for quite a while?
Yeah.
What's changed for the better?
4 months I've been there. 4 months. Yeah. 4 months.
Yeah, well, it's technology.
Yeah, it's like a North American attitude right there. 4 months. I mean, some of it is kind of obvious to me. I mean, the organization cares so much about Credit Suisse. They are so hurt by some of the recent events. They've been there their entire careers. They are constantly reskilling, and it makes that journey around, you know, taking that goodwill, because we were saying, weren't we, that the worst thing about transformation is kind of cynicism. But if you really begin to kind of listen and value your organization and talk about the future as being one of possibilities, I think that's really the kind of key ingredient. And for Credit Suisse, we are the second largest wealth manager in the world. We don't look that much towards North America. We look more to the east. Mm-hmm. And the franchise is amazing. We are one of the largest retail banks in Switzerland. People have their accounts with us in Switzerland for many, many years. The loyalty and longevity of the franchise is quite astounding. And so, you know, think about those ingredients, you know, a great workforce that just needs, you know, a mission and some outcomes. Yeah. And then you think about the franchise. It's not that difficult a journey if you are respectful enough.
Yeah, absolutely. Well, I want to dig a little deeper into that in a second. Rob, I want to go back to you for a minute. I found a quote that you gave TechCrunch. I don't know what year this was that you gave it, but...
TechCrunch.
So you said, And I quote, "We believe that financial services is in the middle of a perfect storm of change, driving towards a better customer experience, frictionless technology integration, new standards, and most of all, a democratization of access to financial services around the world." Question number one is, what is the perfect storm exactly?
Wow, did I really say that? That looks smart. No, I think, to come back to what I said a while ago, this notion that we actually live in product silos, and we used to go, when we say we go to the bank, that's a bad experience, we don't like that. So there's this whole idea and notion that there is a different world out there, and if we grab all the technology and democratization that exists, including tools like the cloud and so on, you basically, and data, we talked about, you guys talk about it, there is this unbelievable opportunity to have a frictionless connection between a consumer, somebody who wants something, is a certain moment in their life, has a certain net worth or lack of that for that matter, and that then allows to go into a ecosystem, to use a vocabulary, and to be able to have a product matched to them and do that in a full digital fashion. So you have a digital identity, you have a set of people you trust, and as a result, there is this network being created, and we're nowhere. We have, for example, isolated, very sophisticated companies that are good wealth managers, but how well do they really know their clients? How much legacy do they have today? And we think we're in a perfect storm because sophisticated companies like Credit Suisse will hire very talented people and they will reinvent themselves. The one that's going to benefit the most is the consumer, because what was only privileged for a few, the democratization is everywhere. It's in technology, but it's also in individuals. So I anticipate a world not long from now where you can have access to that Blackstone product or that Apollo product in a fraction of it all. And it doesn't have to be so complicated. I know the markets are not broken, but to be quite fair, there is a better way. And technology like blockchain and so on will enable this sort of like more digital world where people, when they choose to, will have optionality that we don't have today. And that optionality will allow them to have costs that lower, but also create phenomenal things like financial inclusion, a different way of judging your credit capability. I mean, now it's very simple. You fill out the form, you fit or not, what's your FICO score. So there is a much better way of assessing credit risk. And also there's maybe people willing to take more risk than others. And how do you match those? So I think there's a whole new world out there that needs the same kind of infrastructure we have today, but in a modern fashion, more transparent. And what you're basically going to see, it's a phenomenal opportunity to invest in my opinion, you're going to see a whole new infrastructure emerge, which the beneficiary are the ones who embrace technology, and the real beneficiary is the person who will consume finance, in my opinion. But somebody needs to disagree, no?
Mm-hmm.
Paul, any comments on that? Any thoughts on what Rob was just kind of going through?
I mean, that's a very broad and big picture perspective. I would say I would tend to agree about what is clear in the financial markets in which we operate and others. There's this steady, sort of unstoppable march towards more technology, faster execution, more efficiency, more transparency, and all of those things have really contrived to transform the market players, of which we are a living, breathing example. So I think what's kind of cool about it, it doesn't just transform it for the incumbents, it catalyzes a whole number of changes around it. It fosters opportunities to innovate and to invest. We would probably not have been able to do anything like what we've done in fixed income markets had the opportunity not presented itself to be so innovative.
Citadel is historically known as an equity and options business, correct? Mm-hmm. And you gained huge market share, as you just mentioned, in the fixed income world. Let's just drill in a little deeper. How has technology made you a leader in the space?
I mean, in so many ways, but I'll give probably what I think is one illustrative and powerful example. When we were launching this business, we were looking at how we were going to compete. It's not easy competing with Goldman Sachs. It's no joke. These guys have been doing this for a long time, and they're pretty good at it. But when you traded an interest rate swap prior to our arrival, for example, it was a pretty awful process. You would call up a dealer, maybe 3 dealers, maybe 5 dealers on the phone, try to get a bunch of prices, figure out which one was the best, execute your trade. not a particularly efficient process for a simple vanilla 10-year interest rate swap. So we looked at the things that we used in options and equity markets to, for example, quote and price. And we had a crazy idea and said, what if we set the bar up here? What if we imagined the swap market was like the equities market or like the options market? What if we decided to try to create real-time live pricing on a continuous basis for swaps? Utterly transformational. No one had ever done it. No one still has actually caught up to us and done it. But taking that sort of best of, coupled with that sort of Citadel Securities mindset of setting the bar very, very high for ourselves, we transformed that process from making those 5 phone calls to quoting a 10-year swap on a screen in 100 milliseconds, or less than 100 milliseconds. And I think that's a great example. There's no better example I can think of within our business, and simply looking at the problem, looking at the customer experience, thinking about what could make it so much better. And I would say, I think many of our customers and clients that we deal with, asset managers, pension funds, central banks, sovereign wealth funds, et cetera, they don't want to give that time back to that inefficiency. They enjoy the benefit of our investment and our innovation to make the market better. And I think it's been a great end experience for customers, and it's so exciting for me coming from a big bank where it just wouldn't have been possible. The mindset's not there, the technology's simply not there, and the talent isn't there, and the sort of bold, risk-taking mindset that makes you do things like that it was not there.
What's that next frontier that you're looking at? What's the next level for the business from a technology standpoint?
Well, there's a couple of dimensions. We're pushing much more globally so one of the things I'm very focused on, as simple as it may sound, is we are very clear, and I think our clients would agree, we have something unique and we have something powerful. It's not the only thing in the market, but what we have and what we've created is something unique and powerful. We take all these great people, all the best technologists, the best quantitative researchers, or salespeople, or traders, or analysts, and we all pretty much relentlessly focus on the same core problem, which is how can we keep improving and how can we make this better? So one of the things I'm very focused on, and we're very focused on, is taking that and expanding it as globally as we can, making sure that experience can reach as many investors as we can, not just in the US, not just in Europe, and we're expanding very much in Asia. We're now in Australia, Japan, Hong Kong, and Singapore. But what we're also doing is trying to bring those benefits to investors in other products. So ETFs is a great example. Even our core equities and options businesses, which were traditionally very exchange-driven businesses, we're now pushing out that frontier into delivering larger institutional types of trading for our clients. That comes with new challenges and new opportunities. So we're constantly evaluating new markets and opportunities.
I think we're going to get right into the challenges in a minute. Rich, I want to go to you. Two Sigma is, at least in the world of alternative investing, known as a real quantitative shop. Maybe just give a snapshot of what Two Sigma on the liquid side looks like in terms of their commitment to technology, engineers, use of data, and then now how are you taking it into the real estate world, which is a private markets business? What's that value connection?
Yeah, so Two Sigma's been around for over 20 years. The firm's got over 1,200 data scientists, engineers, researchers within the company. So at the core of the company, it's really a technology firm that invests and uses technologies to enhance investing. Obviously, that's been very successful in the public markets. What we've done on the private side is, how do we embed all of those advantages into private investing from the get-go? So we're not looking at building black box investing. So this isn't about doing iBuyer type investing. It's looking at all the elements of our investment process, from sourcing transactions to evaluating markets, looking at relative value between markets, and also not just looking at top down, but having bottoms up type analysis. So we've built the team on the private side, and real estate specifically, we built it from a fully integrated standpoint. So from the get-go, the investment professionals are literally sitting next to the data scientists, and that's very, very unique.
How do you integrate those teams, your investment team with your data scientists?
Yeah, so it's something that I've learned is on the private side. You've seen a lot of the larger asset managers on the private side trying to understand, how do I use data? Everyone knows that you've got access to so much data. That's a commodity in many ways. It's a cost, but it's a commodity. How do you use that effectively? And I think the advantage of really launching this with Two Sigma is you've got a platform and a DNA of technology at its heart. So bolting on a technology group and trying to figure out how to use data science to enhance your investment process once you have an established process in place is a lot harder. It tends to be an add-on. Culturally, it's built differently. So we've tried to approach it very differently, which is we've built an investment team that looks a lot like any other firm that I've worked at, some of the larger, more successful ones out there. And from day one, embedded data science, technology, really at the get-go. So we sit together. These are products that aren't made by data scientists for data scientists. They're really solutions made by data scientists with investors for investors. And that's a big distinction, because what I've seen a lot of firms try to do, and we've had investors as well come to us and speak to us, you hire a couple of data scientists, you put them in a room and say, here's a bunch of data, come give me amazing insights. And surely enough, you look at it, you go, oh, I kind of knew that, or that's a little bit obvious. But when you're investing the time as an investor to make those tools right, that's where you get the real reward. So having that culture of innovation within your firm from day one and setting that up has been incredibly powerful.
Give us a real example of taking data analytics or any other aspect of the value chain of tech and applying it to real estate. Like, when we think of real estate, a lot of us think of seeing a building or touching a property. Yeah. It's a physical activity. It's a long-term illiquid asset. How are you applying that canon of technology that you have at Two Sigma at this? And
that doesn't go away at the end of the day, and that's why we've tactically and purposefully, and the company, frankly, before I arrived, understood that, as a big data science company, it realized that it is an inefficient market. Relationships still are key. That you can't build a black box. It really is about enhancing. So it's everything from what we've done. It's everything from market selection. So helping us look at the relative value of markets. You're never going to be able to forecast perfectly anything. But as an investor, you're in the business of really trying to understand what's going to happen in the future. How do you think of probability of outcomes? How do you look at risk-adjusted return? And think about it from a holistic standpoint. So a lot of what we're doing is not trying to get necessarily the right answer, but get a better answer. And we're able to backtest that. So anything that we're actually putting into production and use, we're backtesting and able to actually see that the decisions and the work that we've done is leading to better decision making than you would have otherwise had if you didn't have these tools. So at the basic core, market selection is an easy one. We've also built tools that have been at a granular level, so looking at 850 submarkets, but then also coming up with bespoke tools that if we're looking at something on a block corner, we can utilize our 10,000 data sources as well as specific real estate data and have a holistic view to help either challenge a thesis that the investment team came up with, prove the thesis is correct, but really give you a real-time dynamic view of what's going on.
Really, really helpful. Claude, you are the only one of the panel that comes from a research background, economic research background. So we have professional investors, we have financial services, asset managers. What are the challenges that come along with the disruption, the advancement, the innovation that you see?
So, we saw that through this discussion, we talk about technology is great for gaining efficiency, for leaner companies, accountability, financial inclusiveness. All those things are really optimal, but then it's also a change that is based on how to use data. And so if we take a step back, then we know that there is a lot of pressure regarding data ownership or data allocation. So regarding technology, there is few things. Whenever we talked about scalability, we talk about the cloud. And some of the issues that can go with whenever you use the cloud is where do you locate your data, as if you were to be a small company that won't actually get one of those access to those technologies. Those uncertainty have triggered a strong focus from regulators, whether it's for the location, but also for consumer data. So ability to create tailored solutions usually rely on a lot of different type of information. And so among the challenges is to make sure that in this very relatively fast-moving, innovative environment, where a lot of change come out of the financial services, there is also, and how it's happening right now, an ongoing discussion with the different regulators that may not fully understand the repercussion of their own regulation. If you look at, and there is enough information right now regarding the consumer data protection effort that were driven or implemented in Europe in 2018. And what we see is that there is some unexpected consequences. One of them is, well, that regulation end up having very negative impact for SMEs, because this ever-changing landscape of regulation let clients choosing bigger platform to be able, because they were sure that those platforms would be able to actually accommodate any changes. If you translate that in terms of cloud and digital platform, then what you end up is something that could become a systemic risk if there were to be a shock to the financial system, even though the shock was not like for the financial crisis within the financial system. So overall, my point is there is evolution. I was saying that I came here from the systemic issues, and all that innovation means that you have a lot of technology in an environment that is not automatically technology savvy, and regulators maybe a little bit less. And so those are the challenges that, you know, and it's, the world is well aware, G20 and all those initiatives are really paying attention to those.
Rob, did you want to weigh on that a bit?
Yeah, I mean, the regulators have a very important role to play. And it's funny, every 4 years you have a different direction in the worst case or best case, whatever. It's fascinating to see how we will have to bridge that. We being the people who invest in technology. And again, the power of innovation is there. And it is also a force for good, in my opinion, also from a regulation perspective. I think there's a lot of things we can avoid. Somebody used me some stats that we can throw away 80% of our infrastructure today in financial services, if it's retail or wholesale, and we would replace them by new highways and they would be much safer, but the journey to them would be so difficult. So stuff gets overhyped and then somebody wonders how you can implement it. So in words like blockchain and all that kind of DeFi and all those kind of wonderful things, that's a speed of innovation that nobody can stop. And you won't believe it or not, the Web3 or all these beautiful things. But the power of the individual comes through everything in that. And that's why these technologies allows that. And on the other side, you have the regulator, which sort of is worried, half the time not even educated on these topics, because not the best jobs are potentially there. So it's fascinating to see how we'll have to take them along. That's why people make a lot of mistakes in fintech, because they think I've thought up a great technology and it works. Guess what? The regulators are very important. It's half of the dialogue, as is operational execution. What I would like to ask the panel is sort of, what are the biggest inhibitors, in your opinion, to go to a better world? Because I haven't seen any great AI in financial services yet. I haven't seen any great at-scale execution of those modern technologies. Why is that? I mean, I'm not talking about super smart people that use data very smartly and then have their own little sort of ecosystem, but at a broader scale, I haven't seen it. And I wonder, after $4 billion later, why isn't that, in your opinion? Is it legacy related, or what is it?
Yeah, I think that, no, I think that this perception about technology, and particularly these new technologies, you know, so we're talking, at this conference, I've heard AI, robotics, process automation, cloud. It's been these topics that kind of swirl around, as if, you know, innovation was a new concept that our generation created. But I'm sure if you were in somewhere like Kansas when the telegraph, you know, when the telegram was introduced, you would have thought that was pretty pioneering. And so this you know, this theme of technology disrupting people's lives is not new at all. I think what's interesting for financial services is why it hasn't been more disruptive for us. And what are those barriers? I mean, I think the best example of this that I can think of is this question of identity. And so in financial services, we spend a lot of time making sure that our products are appropriate to the investors, to our clients. You know, we go through these checks to say, are our clients sophisticated enough to understand these products? And I always find that very intriguing, because I always think to myself, is that really a reference to our products and the way that we market them? Like what, you know, that matching. And I think this is a really important topic in terms of identity. And so I've been thinking about this for years and years and years, the fact that we spend so much time trying to prove that every bank, every financial organization spends an inordinate amount of money trying to understand who their clients are and their identity. And there's been a race behind the scenes for years about common identity. Google thinks they've won this because of Gmail, and Gmail is the predominant way that we identify ourselves in the modern world, digital identification. Yeah. But that doesn't really tell very much about you at all, other than how to contact you. And really, the best way we can democratize and disrupt finance today is to have an identity which describes people more accurately that financial services organizations can reference. And it seems so easy to do that, and yet the appetite is not there to do it. And so it was a big problem in my previous firm, it's a big problem for us now, it's a huge amount of money in every financial services, everybody knows this. And everybody discusses this as, wouldn't it be good? Now, the reason why this is a really important point is because if you are somebody who doesn't normally have access to our instruments, because we don't really know who you are, if you had identity, then maybe we could actually create wealth for people who don't have access to that today. And so I had a role for many years in the UK government, and I would say to the cabinet in the UK, if you actually wrapped an API around either your NHS number, then you would create an economy that does not exist today. Small loan firms would start up, payment providers would start up. They would use that because you've taken away the whole problem of fraud and identity from that marketplace. And it's kind of as simple as that. And so why does that not happen?
Well, you talked about incentives. You see that blockchain came out of the financial crisis as an alternative. So it's usually, nobody likes change anyway. So financial services are not unique to that. So you need to be forced into.
Engineers love change.
Engineers
love it. They just, that's what their whole ethos is about.
I think you're gonna have a little bit of a revolution going on. It's because the person that is not gonna take it because he or she is gonna have options. And this whole new world, if you think about the definition and you Google the definition of what everybody talks about and say, oh, is it fake, is it happening, is it not? But it's all about the person taking control of his or her life.
Yeah.
And so that's gonna happen, and the regulator will have to follow. Now, we have a role to play, and by the way, there's a difference between the future unbelievable theoretical vision and what happens already today. You no longer have sorry to come back to that, you no longer have 3 channels to watch in the evening telling you what to watch. You now can have this personal choice, and they know you, the data, and the same goes for a corporation. If a corporation needs financing, so I think technology is a force of good, and there will be sort of a little bit of a people revolution on that, I think. And then somebody else said something very simple. I want financial service to be as simple as buying a barbecue on Amazon. And because I can see the reviews, I can see exactly what's going on. So I can buy this barbecue and it comes to me even in the same day if I'm a prime client. Why shouldn't that be with everything we do? Because it's so easy. I stole that from Paul Walker. It's so easy to navigate Amazon, and it's 2 clicks away. So, but if you come to think the complexity of get that done in a wholesale environment, can you imagine, or even a retail environment? But that's fascinating, because it's fascinating also that, what is it, $1.1 trillion a year is spent on financial technology. And they estimate that embedded finance or anything that relates to finance is a $10 trillion industry. And you're still running, no, not you probably, somebody's still running on systems from the 70s and the 80s.
Yeah, I mean, we have, like many retail banks, we have a large mainframe that we run, and that mainframe has been there for a long time. I mean, the predominant risk system at Goldman Sachs, which you were referring to, has been there for 25 years. And so, considering that, it's interesting, this concept of value, isn't it? That much spend and this much value it's not obvious, is it, the value? from this
Yeah.
end.
Yeah, I want to get to just a few other topics here. I just saw that we have 15 minutes left. I want to take also some questions from the audience. Taking a little bit of a turn here, let's just talk about future innovation. I want to talk about what is exciting this panel about the newer technologies that are coming out and how are they being applied to your business, putting yourself in a position to win, or maybe Rob, kind of your portfolio companies would be the way to think about it, or Joanne, as you're thinking about, transforming Credit Suisse, like what are you all thinking about? Maybe Paul or Rich, you guys can kick off.
I mean, from my perspective, we're building it. So that the exciting part and the innovative part is what we're doing. It doesn't exist out there. You've seen some prop techs that are doing elements of what we are in the process of doing, but you don't have an investment manager that really is doing end-to-end solutions. So for us and what we're doing, I think we're a part of that innovation. We're building that innovation. We're trying to do something that hasn't been really done at the scale that we're looking to build it. And I think that to me is exciting, and hopefully that leads to, and we believe it'll lead to better decision making from an investment standpoint.
I would say, what's most exciting, similar actually, in the sense that there's really no playbook for what we're doing and the areas we're entering and how we're applying technology, which means it's a non-linear path to success. But why that's so fun and so exciting is one of our biggest challenges, as it is anyone's, is competing for the very best talent, and we only hire the very best technologists available in the market. But no surprise, there's a lot of people that want to hire the very best technologists in the market. So one of the things that creates an environment where those people want to go is the way in which we're applying technology to solving really, really interesting problems.
Right.
If you hire the very top talent and you give them really hard problems to solve, and you give them the resources to solve those problems, you create this kind of virtuous cycle environment where people want to work and great things come out of it. So I don't know that there's any particular technology that we're excited about the emergence of, but what's been incredible, and I've seen this firm grow from a couple hundred people to nearly 1,500 people over the last 7 years, is just how we just keep going. We just keep relentlessly expanding and never stopping to believe that there's anything that our firm cannot do, and there's no market or no area where we cannot take the things we're great at, and we keep learning to be even better at and apply them in different ways. That mindset and that culture is one of the most exciting things I've ever been a part of, and I think it's very exciting for our clients to see that that's how we operate, and that's what goes in to all the work we put behind giving them a great experience. And of course, it's very, very exciting when you're talking to the industry's top talent about what they're going to come and do.
Yeah, I think we're going to hit the human element in a second, because everyone on almost every panel is going back to the point that the future is really that combination of great technologies and great people. It's not a technology-only future. I want to take a little bit of a left turn with you, Joanne. Every financial services firm has invested in bad technology from time to time, and they've made that expensive error. And I think possibly being inside large financial services companies, you probably have seen that a few times. Give us an example of a mistake that either your firm or you under your leadership have made, but what you learned from it, and how would you advise other business leaders to make sure that they're not making those same mistakes and investing large sums of money and time and just...
Yeah. I remember going to, a couple of years ago, to a financial services conference, and it was around the topic of legacy. And I find this topic very interesting. And I remember at the time Deutsche were there, and they were talking about this inability to adopt or to react to new technologies, and just these commercial opportunities just not being accessible to them. And I think it's worth just touching on this topic because it's a real blocker to transformation. I don't see it actually so much at Credit Suisse because it's not the age of the technology, it's the ability to change it. And what often happens in organizations is they'll have a system, and remember, the two assets that we're talking about, which is managed by your technology organizations, is code and data. And often what happens with code is the people that understood it disappear, and then in order to adapt it, you start wrapping it with different code. And so as soon as that happens, as soon as you diverge from your code base, and I know it's a very technical concept, then that's a terrible moment for a company. You lose the ability to change your code, you lose the ability to transform. And as I said, we have systems at Credit Suisse which make as much money for us today and are as easy to change because we've had disciplines around, you know, a certain skill set and retaining a certain skill set that we had 25 years ago. And I like that idea. One of the very first jobs I did, I was programming the machine presses at the Ford plant in Dagenham, and programming in a low-level programming language called assembler. And these machine presses had been there for 50 years. They'd been used before the Second World War and were still used late into the 80s to do the big metal pressing pre-production line. And that I liked the idea that there's real value there. Now, if you think about new technology like AI, I think about this kind of problem of you managing your real estate of code effectively in a world where AI, we know that one of the kind of problems around AI is that engineers have a tendency to use the most attractive solution and not the most suitable solution to a problem. And we've been working very closely with the Centre for Future Intelligence at Cambridge, who advise us that, particularly with financial services, if you don't get a grip on understanding whether you really need the complexity of that solution to solve that problem, then in 10 years' time, we're going to talk about the legacy issue of AI and the unpredictable nature of AI. And so for me, it's not really about being the first or second mover into new technology. It's about what outcome your business is trying to drive. And I think for financial services, I mean, we want to be, for example, the most digital, the best recognized wealth management firm globally. And there's a real marketplace because there's very few people that would, compete with that. But I really think that you shouldn't be too scared to not be the first mover. And you really need to think through what outcomes you actually want for your business. Because these technologies are expensive. You know, to hire the best engineers is expensive. And I think that cloud offers us an opportunity to really democratize this. I mean, Rob was talking about democratize. What you actually mean is we can talk to other organizations in a much more automated way. I know you may argue it creates semantic risk, but I really don't think it does. I think it creates less risk than emailing back and forward as soon as you reach the perimeter of your company. And that, I think, is the future for financial services.
Right. Claude, just taking off of Joanne's points here, the world's very interconnected, so some companies can adopt the best technology in the world, but if their counterparts or the stakeholders in their ecosystem are not adopting similar technologies, for example, distributed ledger technology or blockchain, how do you think about advising corporations that are on the cutting edge of technology to encourage their ecosystem partners to keep pace?
So I will follow up on Joanna because that actually is the same. So whenever you say you may think that it creates systemic risk, no, that means that educating more, and that's how to convey others to be on board with new technology, because actually it's not new technology, it's natural evolution of exactly as you say, but that means in an environment that doesn't evolve so much, who doesn't have the tools or the talent available compared to their main body, whether it's a private firm or a central bank, because the issue is exactly the same. What you want is people to be fully aware of the strengths and weaknesses, but the actual strengths and actual weaknesses of that evolution whenever it's applied to the environment. Number one. Number two, maybe we're also at a place where it's not fintech, but it's tech in finance. So it's very different. It's an exogenous shock that really could transform the entire finance. So then you need to think at the problem totally differently. And it's not clear that currently in most of the financial services companies, you have the right talent to really look at the things differently. And it's not only in finance, it can be in healthcare, it can be because that's the digitalization of the world, which is a totally, the previous one.
It's more like a mindset, isn't it?
Yeah. So that means you need to educate people, and I think you would agree with that part.
Yeah, and I'm actually on a different topic. It's kind of interesting. You always have to read the mood. So I am extremely optimistic that everything we talked about, the fact, the promise that that technology holds, and again, the opportunity for choice as an individual or a corporation is phenomenal. And if you come to think about it, the regulators will play their role, we will have the new ecosystem, but we have to, cynicism is not, you don't have to be cynical about this, although I just realized that cynical means lefty or something, but at a panel. But the notion of being down on this and saying all the risks, I know there are risks, but the promise is for lots of things. I mean, we could really solve some issue with that technology. We could prevent some shocks. We could have more transparency on economic data. We could potentially touch the unbanked. I mean, we don't talk about it that much, but it's 1.7 billion people, and we can get credit to them. We can get, and this is all through technology. It's actually kind of very powerful. There's some existential issues here we can solve. So, and that's the mindset that we should have, in my opinion. It's more of an attitude than anything else as a result of that.
Rob, you've done something unique in your business to kind of help the portfolio companies avoid problems and also address some of these issues. You built something called Motive Create. Give us some examples. Tell us what Motive Create is, and then tell us how you are.
We are of the opinion that in order to be an investor in this business, you have to know what you're doing. And the last 10, 15 years, it was easy to deploy money, and everybody was making money. We'll make an argument that if you want to really be an operationally led investor, you have to know your business, but more importantly, you have to be able to build companies and lead companies and so on. So we created something called Motive Create, which is today is more than 110 people between London and New York. And they help these portfolio companies think stuff through, but also connecting dots. I would say investing in private equity used to be about playbook, but I would say it's much more about the ability to do pattern recognition. And the opportunity to create portfolio companies that connect with each other. So the investing is getting more sophisticated, and we have a Motive Create team in-house that has its own engineers. Software will eat everything, that is absolutely correct. So I think it's only important that investors who invest in this space are actually engineers first. And I think you guys talked about it from a data perspective. You're data engineers first, and then as a result, you can make better investments. I think we're going to a sea change in private equity. There's been very successful, very large companies, and they're like this unbelievably, but they are core in the traditional investment skills. And I would argue they need to move along and go very deep operationally, and also have a passion of a conviction of a to-be stage, which we talked about, and then make the investments at the right level, and then be also temporary steward. We built a company, we sold it to Jamie, JP Morgan, and we felt that sort of connectivity was something we wanted to do, but you can only do it if you know your sector. So, and we'll find out in the next 10 years, because the next 10 years are going to be less easier to invest capital in the private markets than it was the last 10 years. So we're looking forward to it, because we think our model is better, but time will tell.
Great, we have about a minute and a half left here. We've touched upon the importance of talent and the scarcity of talent. Paul, you mentioned that. Give us your quick pitch for an employee that you want to have on the Citadel team. Like, how do you describe the company and the opportunity? What's that motivational moment where you know you're going to get someone to come on board because they want what?
It starts from a mindset, which sounds obvious but isn't always out there. Starts from a mindset that change is always an opportunity. There's no finish line. The journey is the reward, being on the journey, and creating that set of culture of where we just foster people who are intellectually curious, hire only the very best people, give them those resources, give them space and access to learn, to make mistakes, keep a very clear North Star vision for what we're all trying to achieve, and keep that clear to our talents, communicate clearly with their clients what we're trying to achieve. That clarity of vision is very, very important. But I think it simply comes down to working with the very best people. We don't know what tomorrow's problems really are. We don't know what 2 years' problems really are. I don't know that it really matters. What's pretty cool and exciting about being one of the most nimble firms with all these talented people is I think we can solve anything.
Rich, same question. What's the Two Sigma?
Yeah, but I think it's different for what I'm doing on the real estate side. I think Two Sigma generally, it prides itself correctly on its culture, which is one of innovation and attracting the very best. very much of a team-oriented place, so we're solving problems together. It's not people siloed in different places. And on the real estate side, it really is, we're trying to innovate something new and do something different. So we're bringing the skill set that we have as investors, and we've typically and traditionally done things in very specific ways all our careers, and turning that upside down. And I think that is incredibly exciting and appealing to folks that we have on our team today, and as we continue to build that.
Joanne, if I'm applying to come work for you at Credit Suisse, what are you telling me?
I would say to you, are you change your fixed mindset? Do you want to acquire some more skills? And do you want to be part of this journey of transformation?
Claude, the Milken Institute, there's so many different things. You're part of it. I think we could all probably think about that, what that could sound like, but how do you think about when you talk to your friends about joining and being part of that family? When you want to recruit and bring people into the Milken Institute? It's a little bit of a tough question for you, I
tell all
know.
of them that I'm an econometrician, so I'm almost. And I do like change. So how do you, to attract people to be part of, well, we're a platform, clearly we have great panels.
Yes.
We have good way of thinking, and I just learned that we need to have more data scientists in the financial world, which I wasn't sure it was a problem. So you put data scientists before finance. So that's
All right, Rob, take us home. How do you bring great people to Motive?
I think it's all about being part of something bigger, and the passion, and I know it's all soft words for some people, but the culture, the fact that you are making a difference and also maybe proving people wrong on stuff, and so that sort of street kid mentality that you okay, we're taking on the establishment and we're going to innovate and transform. I think that's very powerful. And also you have to allow people to come in that don't threaten you. It's a very interesting hierarchical model in the US where probably everybody leaves their job because of their boss, not of any other reason. So to be an inspiring environment, you have to lead by, all these kind of traditional stuff, lead by example, be part of something bigger than you think, and allow people to come in and work alongside you. So I think the whole hierarchical model, I think, needs to be, and certainly in our business, is not the right way to go. But we have to wrap up, apparently.
We're out of time.
Yeah.
All right.
Okay.
Thank you all very much.
Thank you.
Thank you.
Thank you.